Sebastien, awesome to catch up. I'll ask that question I asked of Lisa. If I'm bullish stocks, am I fighting this Fed?
You know, Lisa said that the Fed expects a gangbuster economy. I don't think that's the case. I actually think that not only is the Fed put gone, but there's a Fed call, in the sense that any good news gets taken away by the Fed's need to tighten. So yes, I think you are fighting the Fed if you're bullish. It's hard to find anybody that's bullish now on your show. I saw you try with prior guests today. I just came back from a trip to Australia and Japan, meeting with some of the world's largest pools of capital, and I couldn't get anybody to say anything optimistic about the economy or markets.
Seb, I'm not going to mince words. For our listeners and viewers, this is the most important conversation of the day because of your book, Beyond Diversification. Peter Lynch called it diversification. Given the cards we have into the autumn, into 2023, what character of diversification should we be right now? Over-diversified or a more focused effort to guess the right instruments?
You know, Tom, I love that question. And the number one question around diversification is, will bonds, treasuries in particular, diversify stocks if we're heading towards recession risk? And I think they will. And in fact, we've closed our underweight bonds to go back to neutral. We've had a year where diversification between stocks and bonds has completely disappeared. The drawdown in bonds has been unprecedented, and the co-drawdown between stocks and bonds has shaken investors worldwide. So we do need to rethink portfolio construction. Tom, I would say we're going through a paradigm shift in terms of portfolio construction, and the role of bonds will be diminished, but to the extent we get growth shocks, you still want to own some treasuries.
So, Sebastien, I want to clarify what I was trying to get at earlier when I was talking about the Fed. Basically, there is a belief that the economy is so strong that it can withstand and requires a big dose of pain in terms of how high rates go and how long they have to hold them there. That was sort of the message from Jackson Hole. And then they still reiterated this soft landing scenario in one Fed official after another. The bull argument, ironically, is pushing back against that, seeing the deceleration already here, that things aren't that strong and it won't require as much pain as executed by the Fed. Do you believe that? I mean, basically, do you think that that's what people are doing right now and that you should lean against that and believe what they're saying and that basically bet on a hard landing right now?
Look, I always say you should stay invested no matter what if your horizon is, say, longer than 12 months. But we are underweight stocks at the moment. We're watching this. We're not ready to get back in. Again, we are in stocks for the long run, but we are underweight. There are ways to play a more sort of soft landing scenario from a tactical asset allocation perspective. For example, through small caps. I think small caps are already pricing in a very deep recession. And so to the extent you get a recession, maybe they will go down with the market. And to the extent that you get anything that's not as bad as that, a soft or softish landing, then maybe you have some upside at some point with small caps. It takes some courage to lean in. But the valuation spread, look, large caps are in the 90th percentile of their historical valuation relative to small caps. So large caps expensive relative to small caps. Then you get a strong dollar, which tends to be more of a headwind for large caps. So there are ways to play offense. But I don't call it offense. I call it playing aggressive defense. And one thing I would say, Lisa, is there is no doubt the tone was hawkish. In fact, there was no new information in Jackson Hole in the speech. It was a short speech, no messy press conference to mix up the message, but definitely a hawkish tone. You mentioned the word pain, resolve, unconditional. Powell mentioned price stability 10 times. How many times did he mention unemployment? 0.
We'll see if that changes at the end of the year.
And it was in the case of the cost of bringing inflation down.